You start with a spreadsheet. That's it. A spreadsheet, a Bloomberg terminal you can barely afford, and a desk in a WeWork in Chicago's West Loop that costs you $350 a month. You have a finance degree from the University of Illinois, $68,000 in student loans, and an obsession with companies that are dying, not the companies themselves. What's left after they die? You read the bankruptcy filings other analysts skip. You spend Saturdays parsing Chapter 11 petitions on Passer, the federal court database, pulling dockets nobody else touches because the documents are ugly and the process is slow, and most people in finance want to buy things that are going up. You want to buy things that are already on the floor. This is called distressed debt, and you're just beginning to understand what it means. It's just numbers. A company files for bankruptcy, its bonds, once trading at par, $1,000 face value, crash to $200, $150, sometimes $80. The market panics. The market always panics. You do not panic. You open the liquidation analysis buried in Exhibit D of the disclosure statement. You calculate the recovery waterfall. Senior secured lenders get paid first, then unsecured creditors, then equity holders, who get almost nothing. You figure out where in the capital structure the value breaks. That's where you buy. You get your first job at a small credit fund in the West Loop, $85,000 a year. Your boss, a man named Karas, who has silver hair and speaks in incomplete sentences, hands you a stack of Caesars Entertainment documents on your first day. Tell me what the second lien is worth. He says, by Thursday. You work until midnight for 3 nights. You build a model. You present it. Karas looks at it for 40 seconds and says, you missed the make-whole provision. Redo it, you redo it, you're learning. And the learning feels like power. By year 2, you're covering the entire retail sector. Sears, J. Crew, 9 West, a graveyard of American commerce. And every corpse has a balance sheet, and every balance sheet has a number. That means something if you know how to read it. You buy $2 million face value of 9 West second lien notes at 34 cents on the dollar. You wait 11 months. The plan of reorganization confirms. Recovery comes in at 61 cents. You have made your fund $540,000 on a single trade. Karas says nothing, but he gives you a 40% raise. You are the magician. You move to New York in year 3. A seat at Meridian Capital Partners, a $4 $2 billion credit fund on Park Avenue. You're 29 years old. You're making $340,000 with bonus. The office has floor-to-ceiling windows and a coffee machine that costs more than your first car. You learn faster here. You learn that distressed debt is not just about reading documents, it is about being in the room. Creditor committee meetings in Manhattan conference rooms, 20 lawyers and portfolio managers around a table, arguing over recovery percentages on instruments that used to be someone's retirement savings. You sit in those rooms and you speak, you argue, you win some, you lose some. You also learn something darker. You learn that information moves before it is public, not always illegally, but always deliberately. A banker calls you at 7 a.m. We're seeing some interesting trading in the Revlon term loans, he says. He tells you nothing specific. He doesn't have to. You understand the shape of what he is saying. You buy $8 million face value of Revlon first lien loans before the restructuring is announced. When it is announced, the loans jump 18 points in a day. You just committed a felony. You don't think about it that way. Not yet. You tell yourself this is judgment, pattern recognition. Years of reading documents have calibrated your instincts. You tell yourself the banker said nothing. He implied nothing. It was just context, just market color, just the ambient knowledge of someone who has been in this business long enough to feel when the ground is shifting. It's just numbers. But the numbers are piling up. $340,000 that becomes $620,000. You move to a better apartment on the Upper East Side, $6,800 a month, a view of the park. You buy a watch you don't need. You stop thinking about your student loans, not because you paid them off. You have actually in full, but because debt has become abstract to you. It's just a position. Everything is a position. You're 32 when you start running your own book, $600 million in notional exposure. Your name is on the sheet. Your calls, your losses, your wins. You build a network of bankruptcy attorneys, turnaround consultants, and former CFOs who work the same companies you do. You pay for dinners and information and access. Your expense account is $4,000 a month and you use every dollar. One of your sources is a woman named Dana Reeves who works as a financial advisor at a restructuring firm in Houston. She is brilliant. She sits inside the debtor's restructuring process, legally, formally. She is not supposed to tell you anything non-public. You're not supposed to ask. You ask anyway. It starts subtle. How's the process going? She tells you general timeline. You translate general timeline into a trade, then it escalates. The way things always escalate when they are working. What's the dip budget looking like? She sighs. She tells you buy $15 million face value of senior secured notes in a Texas energy company called Bravo Midstream at 52 cents. When the dip terms are disclosed publicly 3 weeks later, the notes trade up to 71 cents. You have made your fund $2.85 million in 3 weeks. You have made Dana Reeves $40,000 in consulting fees she did not earn, and you both know it. You are the magician, you're also the criminal. The paranoia starts small. You read an article about an SEC enforcement action against a hedge fund in Greenwich that traded on material non-public information in distressed debt markets. The article mentions nothing like you, but you read it twice, then 3 times. You start communicating with Dana through Signal. You stop mentioning specific companies in emails. You develop a vocabulary of ellipsis and implication that you tell yourself is just discretion, and that you know in the part of your mind you do not visit often is consciousness of guilt. You are 34. You're making $1 million a year. You have $2.3 million in personal savings in a co-op on 74th Street that your parents cannot comprehend. Everything you have built is real. The returns are real. The relationships are real. The knowledge is real. But the foundation is also cracked, and you have been standing on the crack for 2 years now, shifting your weight, pretending it is solid. You're a prisoner. You just don't know it yet. Meridian's risk committee starts asking questions about your Bravo midstream trade, not accusatory questions, process questions. How did you develop conviction? What was the public information basis? You answer cleanly, confidently. You have rehearsed the answers because you rehearsed them before the trade, the way you rehearse everything. You're a professional. Professionals anticipate. The questions stop. You breathe. Then in April, you receive a letter from the U.S. Securities and Exchange Commission. It is addressed to you personally. It requests documents and communications related to trading in Bravo Midstream Holdings LLC securities between January and March of the previous year. You read it standing at your kitchen counter at 6:30 in the morning. The coffee is still brewing. You read it again. Your hands are completely steady, and this steadiness frightens you more than trembling would, because it means some part of you has been waiting for this letter for a long time. You call your lawyer within the hour. His name is Greenberg, a former federal prosecutor who now charges $1,100 per hour and has a waiting room with leather chairs and framed New York Times articles on the wall. He reads the letter. He says, "This is a formal investigation, not a courtesy inquiry. You need to assume they have something." You ask what they might have. He asks if there is anything they could have. You pause for 3 seconds. 3 seconds is a very long time. In a lawyer's office, he says, "I see. The SEC has Dana Reeves. She was approached 6 weeks before you received your letter. She cooperated. She provided Signal message logs that you both believed were ephemeral, but which Dana had screenshotted over 18 months because Dana, unlike you, had been afraid from the beginning, and fear makes people do things that look like betrayal, but are actually just self-preservation. It's just numbers. That's what you told yourself. That's what you told her. Your firm places you on administrative leave within 72 hours of learning about the investigation. The press release says, while the company reviews certain trading activities, 3 journalists call your cell phone. You do not answer. You turn off your Bloomberg terminal for the first time in 6 years and sit in your apartment and watch the light change on the park outside your window. You have $3 million. You have a $780,000 mortgage. You have a lawyer who charges more per hour than most Americans make in a week. You have a story that falls apart under pressure because the foundation was never clean and you knew it and you traded on it anyway. You are a number, case number 24CR, vote 471, Southern District of New York. Your name is in a federal docket now, on the same pacer system you used to mine for opportunity when you were 24 years old, with a spreadsheet and a hunger you couldn't name. The documents are public. Anyone can pull them. The disclosure statements, the trading records, the Signal screenshots, the $40,000 in consulting fees, the 71-cent recovery. The return on that trade was 36.5%. It was one of the best trades of your career. The magician is always the last one to understand the trick. You sit in Greenberg's office for the 4th time in 2 months, and he walks you through the plea framework the SDNY has proposed. 27 months, disgorgement of $2.1 million, a lifetime bar from the securities industry. He explains the guidelines, the cooperation credit, the judge's likely disposition. He speaks calmly, and you listen calmly, and both of you are performing a version of calm that has nothing to do with how either of you actually feels. You think about the 9 West trade, the one you ran on your own, from a public docket, from a liquidation analysis you built yourself from documents anyone could access. That trade was clean. That trade was what you told yourself. You were a reader of things others wouldn't read, a patient buyer of misunderstood instruments, someone who found value in the spaces between fear and math. You were that person. And then you were also this person. And for a long time, you didn't think of them as different people. You signed the plea agreement on a Tuesday morning in November. The courtroom is smaller than you imagined. The judge is a woman in her late 50s who reads your allocution with an expression that is not unkind, but is completely without surprise, as though she has seen you before, as though you are a recognizable type, a recurring character in a story that the financial district generates reliably every few years. You speak your lines. You accept responsibility. You say that you understood your obligations and violated them anyway. You say this into a microphone and it is recorded. And it is true. And it is also the flattest, most incomplete version of the truth. Because the complete version would require explaining how the line moved so slowly you didn't notice it moving until you were standing in a federal courtroom allocating to wire fraud in connection with securities trading. It's just numbers. That's what you thought. But the numbers were attached to something. They always were. You just learned to look at the spreadsheet and not at what the spreadsheet was measuring. You're a number now, you always were. The difference is, now you know it.